Welcome back to the channel and thank you for joining. As you know, I am not an influencer, I am a trader. We're going to jump right into this without an intro. So, this is a trade that was taken during the New York session on August 6th. So, if you do follow the channel, this is simply the next trade up that occurred. Okay, so we're looking at the broker Tradovate right now, and my entry is represented by that baby blue line that you see, and the red line just below it would be my stop loss. So as you may or may not know, I do exclusively trade Apex accounts. So I am trading 5 Apex PA 50K funded accounts in this trade. I'm using the built-in copy trader on Tradovate. And what that means is everything that's executed in one trade will be mirrored across all 5 accounts that I'm trading right now. And this is Nasdaq futures, and I'm trading M&Q contracts, okay? So these are the micros as opposed to the E-minis. Okay, so I think I've covered all of the basics there. So across all 5 of these accounts, I am in collectively with 15 contracts. And so what that breaks down to in each individual account would be 3 M&Q contracts, which have been executed across each singular account. So hopefully that makes sense. So I do have a break-even stop loss on this trade, and I just doubled up on my position. So we just went from 15 to 30 M&Q contracts across all 5 of these accounts, okay? So right off the bat, you can see there's some impulsivity in this trade. Maybe for some people, that's a normal thing to add to their position, after they're in profit, and to do so aggressively the way that I just did. But that definitely doesn't actually exist within like any trade plan that I should be executing for myself personally. So this is a very impulsive trade. It is a scalp. It's not like one of my regular trade setups where I'm looking for, an order block with an overlapping Fibonacci retracement level, and then, some other qualifying factors that I look for, with internal structure. This is a scalp. Now, for myself, I do heavily believe in journaling, collecting data. And, I like to collect data about my strategy and or strategies. And I also like to collect data about, just myself, human psychology. And so over the past 3.5, 4 years of my trading, I've learned that when I start scalping, it's an indication that I'm being very impulsive. And if I haven't already, I'm probably about to go on tilt. And that's typically when I start trading accounts away, meaning blowing them, smithereens, gone, starting from zero again. So I'm not super happy about the fact that I initiated a scalp trade, but I did, and this one did turn into a runner, and it does go really well. So directional bias is obviously bullish, and I'm trading in the 1 minute time frame here, and essentially, again, not really executing a solid trade plan, just looking for kind of a good random spot to get inside of the bullish momentum. And I was just looking to get a break-even stop loss in as quickly as possible to get a free trade. And all of that has gone successfully so far. But again, I would prefer to execute a normal, trade plan that involves order blocks and a fib retracement level. And the main reason for that is because I want to keep a consistent, congruent risk reward, so that when I run into losers, my winners are taking care of my losers. But nonetheless, we'll just focus on what's going on, in this illegitimate trade that I've entered. So again, I do have a stop loss, and I'm trailing very aggressively here, as you can see. And, typically my max risk in a trade is typically $350 per account. And, I'll take 1-to-1s, I'll take 1-to-2s, and obviously I'll take anything better, just depending on, what the setup is and what the market is looking like. So I've already exceeded what I would be looking for in terms of profit in this trade. and then it does come down to hit my stop. I really can't complain, but next time, I definitely want to look to execute based on a trade plan.